Whenever you are investing in a company, you need an exit strategy. Maybe you're going to hold it forever, or maybe you just want to buy it because now it is cheaper than its intrinsic value, and later then you're going to take your profits once the price gets more expensive than the intrinsic value. Different companies have different exit strategies, and it also depends on you as the investor, your risk tolerance. I won't be going into details about exit strategies today. I want to talk about a specific company, GameStop. Many of you have been asking me about my exit strategy on GameStop. In order for me to answer this question, I believe it is important to talk about the possible scenarios of what may happen to GameStop. GameStop is a very special stock. Not just the company, the stock itself. Because from the point of view of a fundamental analyst, we can say that GameStop is a cigar butt stock. And then from the point of view of a technical analyst, we can say that GameStop may undergo a short squeeze. That's why I believe that even though maybe you're not investing in GameStop or you're not even shorting it, it is interesting to look at. There are, in my opinion, 6 possible scenarios of what may happen to GameStop. We already saw 2 of them, the short squeeze, but now some things have changed. We are going to talk about that in a few minutes. There's another one which we talk about. It is the possibility of GameStop going private. We are going to talk about that again because there's some new information that I just received. But before we talk about these 6 scenarios, please make sure to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am a popular investor on eToro where I manage assets for 225 people. So please subscribe and hit the notification bell so that you don't miss the coming videos. The first scenario of what may happen to GameStop is a forced bankruptcy. Many people have compared GameStop to the next Blockbuster, because we can see that GameStop, just like Blockbuster, failed to capitalize on digital growth, digital e-commerce growth. Now they have bigger competitors such as Amazon, such as Best Buy and Walmart. It is getting harder and harder for GameStop to compete with these big companies. And it's not just these companies, even the way that the consoles are being sold now has changed. Now we see that consoles are without any disk drives. So you don't need to go to GameStop. Maybe you can just download it on the internet, the game, and play it. So GameStop business is going to be irrelevant in the long term. So that's why there is the scenario that GameStop may have a forced bankruptcy. By forced bankruptcy, I mean it goes bankrupt in the coming 12 months. This is something that many people actually think may happen. That's why so many people are betting against GameStop or shorting the stock. Normally, the sales and the free cash flow of GameStop would increase whenever there is a new console cycle. We are now entering a new console cycle. It is possible that the same thing may happen. But like I told you, if people do not want to go to GameStop anymore, they are going to buy it online, then maybe it is possible that GameStop will have a forced bankruptcy. But GameStop made sure that the forced bankruptcy will not happen, because if you look at the balance sheet of GameStop today, they have $735 million in cash. They have about $450 million in debt, and they converted some of the debt, about half of the debt that they had to pay in 2021 into 2023 debt. Of course, the interests have increased, but it's not really that much. The debt, they are going to pay it because they will be able to generate free cash flow in the coming console cycle. They don't have to sell a lot of those PlayStations to generate cash flow because the company is so undervalued right now. So moving this debt, restructuring this debt, I think it is a good move by GameStop, and the probability of them having a forced bankruptcy is not that big if you think about it. But it is also possible that this is the last console cycle that GameStop is going to survive, and they are not going to survive the next console cycle, which is going to happen in 7 years. So now let's look at the possibility of a slow bankruptcy. GameStop doesn't go bankrupt in the coming 12 months, but it goes bankrupt in the coming, let's say, 7 years. The video game industry is changing. Who knows if we are going to have another console cycle? Because we know there's Google Stadia, there is Amazon Luna, there's Nvidia GeForce now. So all these companies are trying to have cloud gaming. Maybe we don't need consoles anymore. You can just play on your laptop. This is something that I'm very happy about because I don't play video games. and I don't really want to buy PlayStation 5 or PlayStation 4 because I don't have time to play video games. But I used to play, in my old laptop, I used to have GTA San Andreas. This is a game I really like. And if it is possible that in the future we'll be able to just play on the cloud, maybe I'm going to play that game again on my laptop. I don't have it anymore. I don't know how to buy it. I don't want to buy it. But maybe this is a possibility because I'm not a gamer. I'm not going to buy a console just to play one game. So it is a possibility that we need to consider that in 7 years, we may not have consoles anymore. And if this happens, this is bad for GameStop. Their whole business is about selling consoles and selling software. And we already see that the software can be downloaded. Right now, there are limitations on the bandwidth of the download. There are limitations on the memory of these consoles. But in the future, these are going to get better. With 5G coming, the Internet of Things, things are going to get better. And it will be harder for GameStop. The solution for GameStop here is to close more stores. They have been closing some of the least profitable stores, but still they are going to go bankrupt, a slow bankruptcy, if they don't fundamentally change their business structure. And this is the third scenario we are going to look at, the reboot. GameStop is trying new concept stores where instead of you just going there to buy video game, you can have tournaments, you can try new games. It's changing, but it's not that big. It's something that is just a concept store. There are only a few stores like this, and there are 5,000 stores. So it's going to take some time to make all the stores like this, and they cannot make all of them. So they will need to close even more stores. What GameStop needs is a radical change in the business structure itself. I'm not going to speculate what the management needs to do, the leadership, what they need to do. This is their job. But I think they need to go online, more and more online. And maybe they are going to this direction. Because you look at the management team of GameStop today, and even the board of directors, it is not the same GameStop we had 3 years ago. There are 9 board members, and only one of them was here 3 years ago. She was here since 2012, but the other 9, they are all new. And we need to know who of these board members. There is, for example, William Simons, who used to be the CEO of Walmart America. There is Reginald Fils-Aimé, who used to be the CEO of Nintendo America. So these people know the CEO of Walmart America. Of course, he knows about retailing. The COO of Nintendo America. Of course, he knows about gaming. So these people now on the board of GameStop, I think it is a good idea. Even the management has changed. Over the last 3 years, GameStop had 4 different CEOs. But now, since 1.5 years, they have a more stable CEO. Even the CFO recently joined the company. But now we can see stability. And those leaders of GameStop, they have skin in the game because the insiders own 14% of the company. But nevertheless, there are a lot of pressures from activist investors. There's Michael Burry, the Permit Capital, Hashtag Capital, and now we have a new activist investor, Ryan Cohen, who owns 10% of GameStop. There is another interesting thing about Ryan Cohen is that he founded Chewy, sold it to PetSmart in 2017. PetSmart's CEO is on the board of GameStop, and the former CFO of PetSmart is on the board of GameStop. So we have 3 people who actually work together now who owns and are on the board of GameStop. So thinking that Ryan Cohen doesn't have any plan for GameStop is not a good idea. He has a plan for GameStop because I don't think this is a coincidence that 3 people who used to work together are now having so much influence in that company. And he said he is going to change the management of the company. He's going to influence them. But so far, we don't have really a concrete plan where he wants to go. We are going to talk about privatization later in this video, but we already made a video 2 weeks ago talking about that. I think he wants to take GameStop private. If there is going to be more influence from these activist investors, there may be a short squeeze. Because right now, 101.9% of the shares outstanding of GameStop are being shorted. It used to be 88%, now it's 101.9%, nearly 102%. An increase of 14%. How is this possible that there are more shares being shorted than shares that exist? Actually, this is not possible. This is illegal. And that's why the New York Stock Exchange already made a statement that the market makers, the brokers, the dealers, they have to find out why there are so many shares of GameStop being traded. They have 14 days in order to solve this. Because there have been so many leverage trades here. It is illegal according to the SEC SHO regulations. So the SEC will inquire this. It happened before this year. And those dealers, market makers and brokers, they had to cover many of the positions. They have to do that. It is illegal. Otherwise, the license may be cancelled. So 102% of shares outstanding being shorted, 292% of float being shorted. I already talked about the short squeeze so many times. I'm not going to go into details today. You can watch the video or even have an analysis on my research partnership, which you can read. And also you will have available my course, Investing for Beginners, for free on the research partnership. Short squeeze happened with GameStop in 2012. About 75% of the float of GameStop were being shorted. And in just 2 years, 20% of float was being shorted. So a short squeeze happened and the stock price of GameStop gained 250%. Of course, this time, if a short squeeze happens, it will be worse. But what happened after that short squeeze? Those investors who made money in GameStop, they just sold everything. That's why they started to short the company again. So GameStop was not really a long-term investment, a long-term commitment from investors from Wall Street. It was just a pump and dump stock. And we may have this scenario again. And this is the 5th scenario that we are going to look at. This scenario is bad for you. Maybe if you're just here for the short squeeze or you're here only for the console cycle. But if you're here for the long term, it may not look so good. Because you buy the company is going to be so volatile and you will maybe need to wait ages to be able to make a good profit on GameStop. Let's say GameStop has a nice report and everything changes. It's going to be profitable again. They are going to be a great company. They will be able to compete with Amazon. Let's say we look at the best case scenario for GameStop, but nevertheless, Wall Street doesn't like the stock, and there's always going to be this pump and dump. Then it's not really such a good idea to hold too much of your portfolio in GameStop. It will always be so volatile. The best thing that can happen in the 6th scenario that GameStop goes private. Then Wall Street doesn't care about the stock anymore. If this happens, then in my opinion, this is the best thing that can happen to GameStop. Because now I'm not invested in the company only for the short-term gain. I want the company to succeed long-term. And in my opinion, the best thing that can happen is if it goes private. I made a video about GameStop going private 2 weeks ago. You can watch it. I'm not going to talk about that again today. But as far as I am concerned, all these 6 scenarios are possible and some of them may happen at the same time. We may have a short squeeze and GameStop at the same time is having a short and dump. Or we may have a short squeeze and GameStop at the same time is going private. Maybe GameStop may have a slow bankruptcy, but before that we have the short squeeze. So all of this is possible. And I have different exit strategies on each one of them. Let's say GameStop is going private. One of these exit strategy is that I may make money by arbitrage. But now let's say it is going private at $30 a share and the stock price because of a short squeeze goes to $50 a share. Then I may take my profit because it makes no use then to hold for the arbitrage. It's already over expensive. It depends on the situation because it is happening so far. That's why I'm making so many videos about GameStop. New information is coming and it becomes more and more interesting. This stock is going to be in a textbook about investing in the future. I believe it's going to be like this because you see company 102% of the shares outstanding being shorted. It's not even only the float being shorted anymore. It's the shares outstanding. There are more shares being shorted than shares that exist. This is first of all illegal, and secondly, why so many people want this company to fail? And the stock price is going up. It already doubled in price in just a few weeks. The stock price is going up, yet people are so wanting the company to go bankrupt. That's why it is important to follow this stock. So let me know in the comments which of these scenarios do you think is more plausible. Thank you for watching this video. Please like, subscribe and share. Please watch these 2 videos here if you missed them. Have a nice day and goodbye.